the CU Digital Town Hall. And we have a couple of great guests today. But first, we're going to talk. Our thoughts and prayers go out to John because he had to go to attend to a family emergency. So again, our thoughts and prayers are with him and his family. And John will be back next week. But I will be, like I was stated at the top here, I will be your substitute teacher for the day. So everyone, please behave. But we're going to have some fun here today. So, but before we get going here, we want to say a special thanks to our sponsors. First of which is the fine folks at CUNA Councils. They put on some fantastic conferences. I know Landon and Rick, you guys have been to plenty of their conferences as well. They do such a great job. And now that we're getting back to in-person stuff, they're going to ramp it up a notch, I'm sure. So if you guys haven't attended one of their council conferences, I highly recommend. And if you do attend them, keep going back. They do such a fabulous job. Our next sponsor are, again, the fine folks at Correlation. One of the hottest core processors in credit union land today for good reason. And we'll be talking about open banking today, and they have a lot of open stuff there. They have an open architecture system there. So kind of a nice little segue there for our conversation today. And then me, Mike Lawson here, CU broadcast host, been doing this for about 10 years now, but filling in for John today. And also want to talk to and give a big, huge shout out to the folks at Best Innovation Group who are doing some great work as well in the technology space. So those are our sponsors. If you don't know them, go check them out. If you do, go check them out anyway and give them a little bit of love, a little bit of support. That's what makes the world go around these days. So, and I'm getting back to our special guest today, the gentleman from ASA. That would be Mr. Landon Glenn. Landon, how are you, sir? You're the CEO there. Landon.
Awesome. Doing really good. How are you doing, Mike?
I'm doing great. And
excited
pretty
to be
much,
here.
What's that?
I'm excited to be here.
Yeah, well, I'm anxious to talk to you guys about open banking and where you guys fall into that and how you guys are helping credit unions and all that good stuff. So I'm going to be really very interesting and timely as well. So, and then our next guest, I think pretty much everybody knows who Rick Cranston is, but I'm going to introduce you anyway. Rick, how are you, sir?
I am good. Thank you for having us, Mike.
You're welcome. So Rick, you have kind of an illustrious technology career behind you and also ahead of you as well, and working with ASA. So with that, I'm gonna turn it back to Landon here, just to give us, before we talk about open banking in general stuff. I want to give you guys a big plug for ASA. What is it and what's it all about, just for folks? And I put your guys' website. I took a screenshot and put it on my TV behind me. So a little branding for you. But Landon, I'm going to let you go first here. Give us a quick 411 on ASA, and then we'll get into some details here about open banking and its the trend and the significance and all that good stuff.
Yeah, thanks, Mike. And with what we're doing at ASA, I've also been in Fintech for quite a while. Working with technology as Rick has, and I think we, talked at my last Fintech Bonsai years ago, and we were doing financial education and fun stuff there. And we just saw so much need in the market to have better access to technology in a way different from what the market currently offered, from being able to have accessibility, from aligning incentives, from having the ability to partner. And so ASA is building a new model to be able to allow people to connect with Fintech in a way that removes all the barriers to entry so that you can have unlimited partnership and scalability between Fintechs and credit unions.
Which works great for both credit unions and Fintechs. And we'll get into that a little bit here in a little bit. But I want to bring Rick back on. And Rick, what is your role at ASA? How are you? Because I know you're kind of the head of credit union relations there. So what's your role there?
Yeah, thanks, Mike. First of all, again, thanks for having us.
Sure.
Great to see so many familiar names and faces. I see a lot of people don't have cameras on. I see Derek Weeks has joined us today, a friend in Nebraska, actually, Keith Caulfield. Good to see Keith there. Carolyn, good to see you. I see Mike's on the call. So good to see folks. I'm the head of FI relations for ASA Financial. Many of you know that John Best and I actually have some experience in working together. We actually co-founded a QSO Fintech a number of years ago that's having some great success. I'll just mention that What we're really building is, I think the best way to think about it is an app marketplace. But there's a real key difference here that I think is important, and that is that it's built around the credit union. There's an awful lot of models that are out there right now that I would argue we suffer from, where the CU is not the hub of that experience. The other thing that's important, I think, that I'll stress is that this is all about members. If you're in the credit union space, we all know this is about members, and right now those members are flocking to the best tech. I might argue that the best tech isn't necessarily with the credit union app. And so we're working to change that. Second, I'll comment on third-party data aggregator models that we all are struggling with. Many of those, and in many cases, we don't really know. Those models are not structured to the credit union's advantage. The third point, and I'll make, and I'll pass this over to Landon, is that we're losing business pretty dramatically because our members are leaving our ecosystem in pretty darn large numbers. We think we have a solution to that. For example, we know for a fact we're losing a lot of personal loans to fintechs. So rather than having to go into SoFi, let's keep our members in the ecosystem. Let's us do those, and we have a solution for this. So Landon, they don't want to hear me drone on. Why don't you take over?
No, great.
Landon.
Yeah, I think, just to add to what Rick is saying, last week we had a really great conversation on open banking going, and then we got cut off a little early. So I've never experienced that before. So that was a first for me.
I've been on like a million Zoom calls, as we all have, and that's the first Zoom bomb that I've experienced. So I should have opened that up at the top of the show. Our apologies to our uninvited visitors last week. If you guys missed it, that's a good thing. But for those who got to experience, our sincere apologies. And so we've taken strides to keep those folks out for the foreseeable future here. So, but anyway, this is take 2 of episode number 64. So yeah, so I'm sorry, Landon, go ahead.
I appreciate that. And Mike, it's really great to see, as we're talking about open banking, the model and what's being built. It's a little bit troublesome to the industry because what it's enabling is competition. It's allowing a new platform or a new ecosystem where you can get checking accounts and credit cards and car loans and everything that you might need directly from fintechs and from digital banks. And so it's pushing forward this big disruption. And so I've been geeking out on open banking and watching presentations and just kind of studying what's going on over in Europe and the pros and cons. And it's really interesting as they talk about, is open banking really benefiting the end user at the end of the day? Are they really getting more freedom and choice? Is it enabling them to be able to do all the things that they need? Because of the competition factor, a lot of banks and credit unions over there are doing the bare minimum to allow accessibility to the API, and they're not supporting it. They're not helping the data connections to be facilitated. They're not helping the end user to know who is safe to share their data with and who isn't. It's kind of the Wild West. They're just deciding who they want to give their data to and if they trust them or not. And it's led these fintechs to really, compete head to head with the banks. And, a lot of people do have neobank accounts with some of the digital banks over there, but the struggle becomes, if you decide you want a different fintech solution, the only way to get that is by switching banks or opening another bank account with this other fintech. And so there are some downsides to the model, not to mention the struggles that fintechs have had with compliance and regulatory burdens and the mistakes being made.
Yeah, and I was going all through your website and stuff and doing some research before our call today, and you have a video on there that it's kind of a summary video of what you guys are doing. But you mentioned Plaid at the very beginning. So what's the deal with Plaid? And pardon my ignorance here, but what is negative about Plaid in this model that you guys have discovered, and then how do you guys resolve it?
Yeah, ultimately, what Plaid is doing is they're solving a necessary problem because people started to want to use fintech. We all remember mint.com and when they were acquired, all the news around that. And I think most people that I've talked to over 50% have tried mint.com at one point or another, and they've plugged their accounts in and tested it out. And that was powered by aggregators like Yodlee and Plaid and Finicity and MX, some of these other groups. And so what they've done is they've said, okay, people need their data for fintechs to work. And so we're going to get that data and send it over. That has kind of evolved because as those fintechs have grown up, they want to be able to write to the core and make changes, opening accounts or moving money, or, customers decide they want some other thing and they're not able to get that just from a data API or screen scrape. And so they've moved on and said, okay, the only way we can offer these services is if we essentially become a bank and start offering those accounts and competing or sell these products to competitors. And so what it does is it allows the customer to download, or the member to download their data into another an application or program or app, a budgeting tool or whatever it may be. And then once that data is in there, then they start selling those competing products and services. Gotcha. And it cuts the credit union out.
Right. And that's a bad thing. That's a bad thing. So what you guys are doing is inviting in the fintechs and kind of dispersing them out to credit unions and hey, for me, especially if I was a startup fintech and had some really cool technology, like I'm showing it off at Finovate and things like that, this would be a no-brainer for me. I'm just, again, maybe my ignorance is coming out here, but it would be because you have such an engaged, if you partner with a credit union, you have such an engaged audience already to really get this thing off the ground, right? So this is kind of another reason why you guys probably started this, right? From the fintech perspective, right?
Well, yeah, the last fintech that I was with had the same issue. Our credit unions wanted to have real-time data coming in. For those who don't know Bonsai, the website's teachbonsai.com, and it's a financial education software. And it's primarily used in schools, but we created an adult program. And our credit unions wanted to be able to include real life data from accounts into that program. And it wasn't something you can easily do. You can't just go plug into all the credit unions. And so we weren't able to, meet that need in the way that they wanted. And so as I saw more and more fintechs struggling with this over the years, going to, CUNA marketing, business development, financial brand, all the different marketing conferences for the whole industry, we noticed that there was a common consensus, and talking to other fintechs, they were all struggling. And funny enough, you mentioned how excited you would be if you were a fintech startup. One of the largest fintech accelerators in the country, is investing in our last round because they agree with the mission of what we're doing. They see the value, and I think they have so many fintechs that have struggled they have great ideas, but they struggle to go to market and put those products live. And, they decide to, become banks, or they try to go partner one-off with a core processor here and there. Yeah. And as they see the burdens and the cost of integrating with each individual institution, they realize that they can't scale that easily. And I've got a few slides that I can pull up as well to kind of explain things a little better. Okay, let me share my screen.
Melissa, is he able to do that? Oh, I guess he is. Never mind.
Yeah, the name Asa, for anyone who's wondering.
Yeah. Give us the name. Give us the story behind that.
So it's after Asa Whitney, who was the original proponent of the Transcontinental Railroad. And he believed if you could unite the coast, it would change America forever. And the Industrial Revolution, today we're still feeling the benefits from all of the opportunity and the innovation and the creation of value that was done from all the different people that were able to participate in that, and all the towns that popped up along the rail lines. Similarly, we see, the course of where the banking and fintech industries are headed, and we want to change that course in a similar way. We want to bridge the gap. And we talked a little bit about the problem already, and Rick mentioned this at the beginning, is that, as a credit union, sometimes you don't have the newest tech. And so your members might want something that they can use for their personal finances or their business or their investing, and it's not something that you currently offer. And so because of the difficulties of plugging those apps in, we saw a big push in open banking. And of course, here in the US, we don't have open banking per se. Over in Europe, they do. by mandate, they have to have an open API for the data so that your customers can go in and use their data for anything they want.
Okay.
And so our version of that here in the US sort of has become an aggregation model. And so those aggregators used screen scrapers initially, where they'd go to the website and they would log in as if they were you with your username and password, and then download all your data. And then once they have the data, they kind of own it in a way where they can sell it to other people. So you can go in there, you can buy account numbers, you can buy transaction information, you can buy account validation, all kinds of different things. And they're monetizing and keeping all of the profits from that, and the financial institution doesn't get paid. And so with the problems, I think we know some of the problems with screen scraping in and of itself is the connections can go down. Like, have you ever tried mint.com yourself?
Have I?
Yeah.
I've dabbled with it, but nothing too detailed. I was kind of turned off to it, so too deep.
So I used it probably, I don't know, it feels like it's a decade ago. I don't know if it was 10 years ago or what, but
it feels like it when it started. Yeah, when it started.
Yeah, and when I signed up for it, I was like, oh, this is great. It's going to organize everything. And every time I logged in, it would say, fix your connections with this, and this, and it would take me a while to do. And right now I have Venmo, and my connection with Venmo went down. It took me like 15 minutes to get it reconnected.
Good grief.
And so because of the amount of time and energy that it takes to keep those connections going, I stopped using mint.com. And I know a lot of people stopped for that reason. And so now they're trying to get APIs and direct access to the data, because there's a lot of complaints that financial institutions and credit unions specifically receive from their members who want to use fintech. And if the fintech's not working, they'll call the credit union and blame them and say, hey, why doesn't my fintech work?
Yeah.
Well, I mean, if you're a startup fintech and you're charging someone $10 a month for access to a budgeting tool or something like that, and then that budgeting tool stops working because the website is changed, or they increase the security for the login, and they have to go and rebuild the crawler and the scrapers, then when they call up and say, hey, my app's not working, well, the fintech will call Plaid, and Plaid will say, you're going to have to wait till it gets fixed.
Oh my God.
It might take a week, it might take 2 weeks. And so another guy on our team who founded a fintech said he had this happen with one of his flagship credit unions. And he had a significant number of customers who were members of that credit union. And it took 14 days to get the screen scraper fixed.
Oh my
And there was a huge fallout. People were canceling like crazy.
Oh, I would too.
Yeah, if you're, you're paying for something
online. Good grief.
Yeah, to have your data not come through for that long. And so when those things happen, it's, the fintech is going to naturally say, hey, it's not us. It's, your credit union broke it. And, so as you look at what's happening in the marketplace, the popularity of niche solutions is exploding. I mean, new stuff's coming out. It feels like every day.
Yep.
And they're going after every single piece of the banking industry. I don't know if the listeners know this or not, but so far year to date, $1 in $5 of venture funding has gone towards financial technology.
Really? Wow, that's significant. Good grief.
Yeah, if you're a venture capital group and you're looking to disrupt something, why not try and become a bank or take over pieces of the banking sector? It's a profitable industry.
That's what Square is doing right now. I just read this morning. Or I think Ron Shevlin did a whole big Forbes article on Square's, their checking account, how they partnered with a bank and all that. Oh yeah, it's the whole crazy stuff. And Square is one of the biggest threats to traditional banking today. So just wanted to throw that out there for you. And I have a link on it to CU Broadcast if you guys want to go check it out. Really good article by Ron Shevlin. But anyway, Landon, didn't mean to interrupt. Sorry.
No, that's great. And, Rick was actually emailing me about that this morning as well.
Oh, was he?
So yeah, so that's a hot topic. And, even, what is it? Jamie Dimon said that, if you are a, incumbent player, credit union or bank, that you should be scared, out of your pants. So I won't use the word he used, but of fintech and what's happening and where the industry is headed and what, some of these other groups like PayPal are trying to launch digital experiences and solutions that can do everything that you could ever need in a financial environment. And if you're a user and you can, go online and get approved for a loan in minutes without having to go into a branch or talk to anybody, versus, hey, I can go in and fill out paperwork after paperwork and take many days and get a decision at some point. The industry is shifting, and they see opportunity to steal market share.
Oh, completely.
And if we look at some of the prominent fintechs out there, they all start out with some small solution, some niche tool like, hey, we're going to allow you to round up transactions and use that money to invest or whatever else. We have some other partners that use that to pay down debt. There's a lot of different niches for that. Or we're just going to help you move money. That's all. No big deal. It's just one thing. Or hey, we're just going to offer free trading. But inevitably, any of these fintechs that succeed, you'll notice they're going down a path to becoming banks or offering their own checking accounts and credit cards and even loans. And I felt like the nail in the coffin was, just a couple months ago when Plaid announced their direct deposit switchover program. And I don't know, are you familiar with that one, Mike? Or
no, I'm not. I was about to ask you. Tell me more. I'm sure a lot of folks on the call know about it, but I'm curious.
Yeah. So essentially, what it is they're enabling the fintechs because some of the fintechs are losing customers because the connectivity goes down for their data to the institution. They're now offering their fintech customers the ability to switch over your direct deposit. And so they can now message the credit union member and say, hey, switch over to move your direct deposit over to this other checking account. And we're going to make sure the connection never goes down.
What?
And so I see your eyes getting big.
Yeah. This is scary.
Yeah. And a lot of people don't know that that's where the industry is going. But so when you're integrating and giving access to the data to Plaid, you're able to help your members access to fintech, but on the other end, they're taking that data, they're selling it to other competitors. So they might say, hey, you should enroll in this aggregator program. You're going to get all this great data. But what they're also doing is they're taking that data and they're selling it to your competitor across the street. And then the competitor across the street, once they've got their data, they're going to the next guy and saying, hey, we can give you the data for both of these guys if you pay us. And so everybody's getting access to everyone's data so that they know what you're paying on your car loans and your personal loans, and they can go in and try and undercut and take that market share away. Yeah. And at the end of the day, that's good for the end user to have a competitive model where they can get the best pricing.
Sure.
But on the flip side, they're also taking the fintechs and saying, hey, let's switch your checking account over so that you can have a constant, secure connection to that data. And if I don't know, is this an open conversation where people can ask questions as we go?
I would love it. Yeah. If you guys have any questions or want to get the credit union perspective or get the fintech perspective, if you guys have any questions, hit us up in the chat or just pop on, on the screen here, and we will, and the stage is yours. So we would love to have some interaction. I'd love to get the credit union perspective, especially on this, just to get your thoughts and what's going on out there, because you guys are the front lines. And so we want to hear about this and talk about it, have an open dialogue, because Landon's here for you. so are we.
Thanks, Mike.
Yeah. So to get an open dialogue. So anybody has any questions or any comments, please feel free to chime in. Pardon the,
you
pardon
can
the pun.
Unmute.
Sorry, I said chime. Sorry.
Another big one, right?
Darn it. There's Gary. Gary, want to say a few words? I think you're on mute.
You're muted.
Sorry.
From United.
Hi, nice to meet you. I do have a question. So I think I read recently that Plaid purchased ClickSwitch. Is that true?
I may have. I can't remember for sure on that one.
I'm looking it up.
Okay. And the problem has been, even with ClickSwitch, is that it's entirely manual. There's PDF documents that have to be printed out and filled out by the member. It can't really be automated. So I'm curious how they're going to be able to automate switching accounts.
And we've got David on the chat. He said that Q2 bought ClickSwitch.
Yeah.
Oh, Q2 bought ClickSwitch. Okay. The same challenge. Q2 is a online banking provider. So, an online banking provider, not a host provider. So I'm just curious how they're going to do a direct deposit switchover that's an automated function.
Yeah, and with talking about the Plaid model, what they have access to partnerships where you can either lease the charter of a bank, or in some cases these fintechs are becoming digital banks through some of the new pilot programs. Like here in the state of Utah, we've talked to the Federal Reserve representatives and the ones that handle the banking sector for those regulators, and they do offer fintech trial charters in many states to do that. But a lot of them are just getting a bank that's willing to offer those charters, and they're just having them partner up and offer the account through them. And so it's a partner bank where they have a secure connection with an API. The data is not going to get lost, because for a lot of smaller sized or medium-sized credit unions, they're never going to have a reliable connection to Plaid. And so they're just trying, the only workaround is to replace those credit unions. And Rick, did you have a comment? I saw you turned the video on.
I did. I wanted to ask some of these guys for some input. Keith is running a credit union. Derek has been hip deep in the middle of an enterprise credit union for, I won't even say how long, Derek. Caroline has run credit unions. I'm really curious if any, what you guys are seeing on the Plaid models, especially the larger credit unions, when it comes to apps. What are you seeing? Deals that are challenging? Are you seeing deals that are advantageous to credit unions? Or if deals at all? We talk to credit unions all day, every day, and you're getting our input, but I'm really curious as to yours.
Yeah, that'd be great if you guys want to chime in again. Sorry, if you guys want to add your comments, so, that would be wonderful. Keith?
Rick, it's great to talk to you and see you. I don't know how much I can lend to that right now, other than everything you say I agree with. I don't know how much I can add to the conversation in the moment. And I'll think about if I can bring something of value to the conversation, but I just want to let you know I am paying attention, listening very closely.
Thanks, Keith. Good to see you, sir.
Yes, sir.
Thank you, Keith.
And maybe we can spur some more thoughts and comments as we continue through here. But if you look at the personal loan market, just as an example, fintechs used to be nothing to be concerned about, and now they're doing more personal loans than all credit unions combined. And you can see the same type of trends happening with the increase in lending with some commercial products and even mortgages, car loans. They're going after all of the different sectors and segments of the industry. And so what open banking is kind of causing today, and you may feel the peripheral, around the outsides, you might feel the effect of this starting to happen. But the best case scenario is that what open banking is doing is it's strengthening the relationship between the fintech and your member, where there's more eyeball time, they're spending more time on those apps, they're becoming more passionate about those niche solutions that are making their lives better. And the best case scenario is that it weakens the membership in some way with the credit union. And then the worst case scenario is it may sever the relationship completely. So what we're trying to do here is, as with any disruption, we see what's happening and we're looking at 5 years down the road where we think the industry is going to be based on the indicators in the market today. And we think that the future of open banking is that a combination of neobanks or banking charters or credit cards or prepaid debit cards acting as an account for payments and moving money and things like that. In essence, that suite of services being offered by aggregators to fintechs, and they no longer need to get the data from you anymore because they've replaced you. And so they have your members, they have the fintechs and all the technology your end users want. And so it leaves you on the outside looking in. And we see that as highly problematic for the industry. There's some estimates that are saying in the next 5 to 10 years that 2,000 to 3,000 credit unions and banks might disappear. So how can we change the trajectory or the course of where things are headed? Just like Asa Whitney with the Industrial Revolution, he changed the course of America. He sent us down a different path. How can we change the course of the industry? Is it possible for us to band together and build a new cooperative movement and a new bridge that's going to take the industry a different direction? Mm-hmm. And if so, how is it possible that we bridge that gap? And in what ways can we do that? So what we're building or have built is what we call collaborative banking. And the idea came from this by talking to a significant number of fintechs and finding out that they're very excited about the proposition of not having to become banks. They see some of the downfalls and the costs of becoming a bank, the regulatory burden, as something that's not their wheelhouse. They don't want to do it, but it's the only way they can offer the full service of what their customers are looking for. And so when we found out that they were open and willing to work together, we said, okay, how can we take all of the benefits of open banking that your members are looking for and combine that with a partnership model where everyone wins? Did we get a comment, Mike?
Yeah, did you see the comment from Caroline?
Let me check here.
He says, we are using MX as an account aggregator, which uses only APIs, and we do not support other aggregators. When we get complaints, we tell members why we do not support others for security as well as promotions. We haven't been tracking the stats of closures.
Very good data.
Thank you, Caroline.
Yeah, super helpful.
Yeah.
And Carolyn, if you have any questions around that, feel free to kick in. Gary, did you have something to add to that?
I do. So kind of what I'm seeing is a lot of these aggregators, especially ones that are doing screen scraping, it's being broken by second factor authentication. So are they working on a workaround for that to get around that? Because it works great if they can get right in, but if they can't get right in and there's a code that has to be entered, that they can't program for that with a screen scraper.
Yeah, in some cases, the aggregators are, building a model where it literally is taking you and logging you in through the process, and then you get the same code to your phone that you have to authenticate the same way. So essentially, it's allowing them to log in as you, and you're walking them through that process. There are some people that are still hesitant to do that kind of model because you're giving a third party access to all of your financial data. And, if for some reason, Plaid or someone were to get hacked and all your money disappeared, technically you've breached the terms of service for your agreement by giving away your username and password. And so there are some people that are skeptical or hesitant on that are slow to adopt. And so, that's where I guess I can't speak as much to where I think they're going to go to solve those problems, but the difference, I guess, with what ASA is building here is we go directly to the credit union and get direct access to the core processor, and we integrate the same way your mobile app would, directly with permissioned access, where we're SOC 2 and PCI compliant, and we're integrated directly so that when we have that fintech access piece, we're now able to provide a seamless experience for the customer. So the real winner here is the account holder, because they have total choice and control to do anything with their finances.
Right. Okay, thanks.
Good stuff.
And
thanks,
you might know, obviously, John Ainsworth and MemberPass. That's another partner we're working with to be able to offer the ability for more secure credentials. And so it makes it so that we have, kind of a first-in-class fraud prevention model that allows you to integrate everything seamlessly.
Yeah, how does that work, Landon? Because I remember the last time we spoke, you guys mentioned that you guys were partnering with MemberPass or Bonify, and Rick, you were talking about that as well. So how exactly does that work? That really kind of piqued my curiosity on how that whole thing works.
Yeah, because Bonify is amazing. They have the ability to create a credential that's stored on your device, kind of like a blockchain or a Bitcoin that, your identity, your membership to the credit union. And so with the ASA partnership, which we haven't built this out yet, we're still in the MVP phase with our first pilot customers. But once we've built the product out, we're envisioning a world where the member pass credential can be used to authenticate your ASA application and unlock the app store to banking. So you'd have the identification piece there, certified, through that credential with that verification piece, and then we can have the app store for banking. So you'd have one-click authentication. Imagine if you could download one thing, click one button, and then you had a permanent, secure connection to every fintech that you want to use.
Right.
That never goes down again. And so, Member Pass helps to power that.
Okay, cool. Okay, I see now. That's cool.
Yeah. So the whole purpose of what we're building here is we want to incentivize the fintechs to partner, and we want to build a model where they really become dependent on you. Instead of taking the data and selling competing products and trying to make money out on the open market or becoming a bank, now they're building their whole model around your products and services. So if you have a budgeting app that wants to use a credit card for your daily spending so they can have all that information, that credit card now becomes their credit union issued card. So it increases the interchange, it increases the time spent with the credit union. And then when they have that insight, because they know your budget, oh yeah, you just saved up for a car loan or a personal loan, you're ready to make a purchase, they can send that lead back to the credit union, and that credit union can then deliver exactly what the member needs in real time. So it's a way of creating personalized marketing where you now have the thumbprint, you have the pulse of the person or the business or whatever it is, and you can get all of the information you need for real-time approvals for different types of products and services. So, let's say you have a business and you're using an app for, real estate, and it tracks all of your rental income, and you can drag and drop all the checks to each property, and then it tracks all of your expenses, and you can upload the receipts, tracks everything there. Well, now you know in real time how that business is performing, so that you're able to offer products and services similar to what Divvy is doing. And Divvy's right up the street from us as well. We have a lot of amazing fintechs here in Utah. You guys all know MX. MX is right up the street. I'm big fans of MX and what they do.
Yeah.
And Divvy just got acquired for $2.5 billion to Bill.com. And they have a credit card that, you swipe the card and away you go. And they haven't had to partner with banks. They don't need banks. They're just replacing the model, and they raised, I think it was 500 million or something to be able to offer lines of credit and instant approval for different products for their business customers. The reason they can do that is because they know more about the business than anyone else. They have every transaction, every inflow, every outflow. And so what ACE is doing is we're building a model where you can have that exact same tool built around all of your credit cards, all of your checking accounts, savings accounts, business loans, or personal products and services, and have real-time access. So, you could think of a rural farmer who, you track the price of grain in real time, and then you look at the weather patterns and you can forecast the yield for their crop for each season, and you can adjust their line of credit accordingly in real time using that data. So this enables you to combine data and technology that these fintechs have, and the data goes both ways. And so not only are they able to get your data, but they have valuable data that they can send back to you in real time.
Goodness. So do you guys work with core processors, or are you guys separate from that? Because I'm thinking about one of our sponsors, Correlation, and they have an open architecture system where credit unions kind of pick and choose whichever vendors they want to work with. So if so, how would you work with a core like that, or do you, or what you guys do, is it totally separate from the core?
No, it's a partnership model where the core is included as well.
Okay.
So we're actually planning on going to the Correlation conference, and we've talked to them. They're excited about what we're doing, and I think there's a huge opportunity here. Our first integration partner is with Jack Henry Scimitar, and we've got probably 6 other core processors lined up for next integrations. So the nice model here is that we can offer really cool stuff, where someone from Jack Henry, the head of retention, can look at this and say, wow, how soon is this going to be ready? Because I can offer something where it makes you future proof. You now have real-time, unlimited technology ability coming out, and we can talk about how that's possible here we got a couple more slides to get there, but the whole idea here is that the fintechs are now selling your products, your services, and they're helping you to grow. And so they're, right now they're buying the data from Plaid, and you don't get paid for that. And so first off, we're going to start helping the credit unions get paid for their data. Second off, because this model's built around the credit unions, they're going to be sending you leads for your products and services. And then the third piece, that's probably one of the more exciting pieces, is that they can now send you new members. And the way that's possible is these fintechs are already out across the country marketing their, budgeting app or restaurant app or whatever it may be. And they can sell things on Twitter or Facebook or whatever other social media platform or marketing vehicle. And when they get somebody that wants to sign up, all of their existing customers, they might be having them set up a bank account through Stripe or something like that.
Mm-hmm.
And then those funds get taken out of the banking market. It's taken away to a competitor.
Right.
And so instead we're saying, hey, we have a network of credit unions all across the country. Let's park those funds at their account. This person lives right here across the street from this credit union. Let's sync these two up.
Right.
And so now they can go out and sell their products. And when someone new signs up, they're like, hey, do you want more reliable data than what you can get through any other aggregator? Do you want real-time information? Do you want all the different perks? It works better. Well, let's switch you over to this credit union in town. You can go to, Community Choice or, First Education or whatever awesome credit union is out there, and they can send people in that direction now.
Oh my gosh, this just opens up a whole new, oh my gosh, a whole new, I don't know, I'm trying to think of the word parameters, or just a whole new world for credit unions, because it just, and having all these fintechs, all these apps being available from, at the credit union, and the credit union is kind of that foundation of it all. It just really opens things up. It's again, the term value add really comes to mind, and just where you can use your credit union not only just for the transaction or a lending purpose, but for any other things. It just makes your credit union that much more sticky, I would think. So is that kind of the aim here as well? And I would love to hear from credit unions what they think about this and how it would add to their value proposition.
Yeah, I think you nailed it on the head. I mean, there's limitless potential to what this can do.
Right.
With the FinTech Accelerator, they look at it and say, hey, what if these credit unions tell us the solutions they need most? And then we can find founders and build it and bring it on the ASA platform, and they can instantly get access. And so instead of one credit union and one integration, when you integrate with ASA, every credit union that's on with ASA gets access to every FinTech.
Yeah.
And so beyond that, we talked last week about payments and what Plaid is able to do because they have the authentication of the account. They've been able to change the game. Mm-hmm. We're building that exact same network around the credit unions. And now your account and membership can be used to authenticate anything. So think of Craigslist or other marketplaces. Yeah. Instead of using a phone number and dealing with all the scammers and hacks out there, you could have certified authentic Craigslist accounts, and we're authenticating them with your Bonafide credential and your membership. Right. And so now we know this is a real person. We know who they are, but we don't have to share their name. We don't have to tell you anything about them. We're just able to tell you, yes, they have the money for the transaction. And if they scam you or rob you in the McDonald's parking lot when you go to buy your item, then we can send them to jail because we can track them down. And so now all of a sudden you could facilitate and fund the purchase of a car loan or an automobile on Craigslist without even being present, without even having a member come in. Yeah. We're able to authenticate, figure out it, and then put the funds in escrow. And then when the transaction's complete, both parties can click submit, and then the funds are released and the buyer takes the car.
Okay, the word empowerment is coming into my brain now when you just talked about that scenario, Landon, and it just really empowers the member to really kind of be in control of their spending and their financial management in this area. Because again, there's just, oh my gosh, there's so many avenues you could take this, and your credit union can almost become a hub for all of this activity, I mean, when it deals with money, so, oh my gosh, I don't know. I'm really thinking way outside the box here, and I could be going off a really, steep cliff here, but I see so many possibilities here for a credit union to really kind of expand its horizons, pardon the cliche. So.
Well, the reason that word is, funny that you say that is, I think it was 2.5 years ago, with my last fintech, I was invited to the Citibank Open Innovation Challenge, and I got to meet the CEO of Citibank and ring the opening bell on the New York Stock Exchange and do all these, awesome things. And the whole theme of that event was how to empower people to take control of their finances and pay off debt.
Yeah.
And I looked around at our fintech, and there were 7 fintechs there, and I realized none of them had the rails that they needed to be able to really hit the market. And so we said, we're going to build some new rails, and we're going to create a new world where fintechs can build on top of the credit union's rails, and where credit unions can build on top of the fintech's rails.
Mm-hmm.
And now essentially you've got an app that has a marketplace of unlimited fintechs that can do anything that you can imagine. And the reason that's so important is when we were in that fintech space, there's a lot of pains that you don't realize when you have to become a digital bank. The cost of acquisition for new customers is high. Most of these digital banks over in Europe are not profitable, and they've been doing it for a really long time. There's all kinds of regulatory burdens, and these fintechs break laws that they don't even know existed. All the founders of Venmo almost went to jail because they weren't KYCing the customers. You could take a stolen credit card and throw it on there, empty the whole thing out. They had hundreds of thousands of dollars disappearing overnight.
God.
And then when Braintree bailed them out and bought them, they flipped them and cleaned it up and got it all up to compliance. And then they sold it to PayPal and made a huge return. But the same thing, you look at Robinhood and they say, hey, we're now offering checking accounts and they're FDIC insured. Like, oh yeah, we forgot to do the FDIC part. It's not actually insured. And like all these problems and gaffes that fintechs are having, they realize that it's not a good model. They don't want to be banks.
Yeah.
And so we're building new rails where they can use you as the bank.
Exactly. Gary, did you have anything to add to that?
So I have a question. So what you're proposing to build, and are you in the process of building it, or is it available today?
It is available today. So we're going live probably this week with our first pilot partners. And we've got a handful of contracts signed with our first pilot agreements. And it will be live either this week or next week with real data and real customers.
So you're proposing to be a platform that's a middleware for fintechs as kind of a clearinghouse that financial institutions can pick which fintech they want to features and functionality, because the fintechs focus on a niche, right? They solve one problem that's part of a whole bunch of problems, right? From a user experience perspective, and try to streamline it and remove any friction. You're wanting to create a clearinghouse for all of them that then you don't have to go directly to. So you're going to offer preferential pricing then for the fintechs that sign up for your program. And back in the day, I was a founder of Carillion. So the challenge back then for online banking was everything you wanted to do with financial institution had to be done with the core. The first nut we had to crack was getting access to the core. And that's a bit of a problem still today. So that's going to be a problem for you to solve as well, to also put yourself in the middle. So is that the overall goal of the company and what you're going for?
Yeah, I think that's a pretty good summary. And, I guess to kind of explain, what it is that we've built, our patent is around an access control firewall. And so in essence, we are SOC 2, we're PCI compliant. We're the only group that ever has access to the core. And then what we're doing is we're normalizing and anonymizing all of the data that comes in from the core. So that way we don't have to tell the fintech your name, your email, your account number, username, password, nothing. So the fintech authenticates through the ASA application. And once they have access to that data, they get desensitized data for like transactions and things like that to be able to provide their function. And then the member has the access, they download whatever fintech they want, they approve that connection within ASA, and then they have the ability to sever connections with any fintech at any time, or to manage what can be shared with who. And so instead of when you integrate with the core, normally you get access to all of the data.
Mhm.
Well, now we allow the end user to specify, hey, I only want to share data from my credit card or savings account or checking account. And so now they can actually keep all of the other data private. So this is a really exciting proposition for the core processors, that we're providing that functionality. And the end result is that the member will have a website. They can go to the credit union website and see all the great apps that they offer. Or they can open up the ASA application and see categories just like you would in the Apple App Store. I mean, really, when Steve Jobs launched the App Store, I don't think he even realized the innovation that would take place as a result. And when you give the crowd the power to control that innovation, it unlocks a platform that just grows faster and faster and faster. And so our whole goal here is to remove all of the barriers to entry for fintech and create an open banking platform that's built on top of the credit union rails. And so instead of the fintechs becoming their own banks, they're using your products and services. So there's a lot of pieces to your question, but to go back to this slide and talk about how it works, ASA sits in the middle. So if you're wanting to do anything that's writing to the core, opening accounts, or doing anything like that, we'll have an SDK. You'll have to authenticate those things with ASA. So think of fraud prevention for an example. We just raised our seed round and a large chunk of money, and so now we don't want people to steal that money from our account. So we can set up the ASA app and say, okay, hey, I don't want money to leave unless I've approved this transaction. So the functionality comes into place where you have that prevention piece. And that's where a lot of the exciting things of Bonify comes into place too. Maybe you say, hey, I want to approve this transaction, with me and our CFO if it's over $5,000, and I'll never want that to leave the account. But the functionality here, you down the road be able to have the ability to approve ACHs and see money as it comes and goes, control all of the access to your account through the ASA tool.
The end user, the member, will be able to control that. So it's like business rules. So they're like card controls. I can turn my card on and turn it off.
Correct.
Okay.
So it's all building functionality for the end user. So for a long time, the industry wanted to control or close the whole banking experience. And that means they want to own the app. They want to control what people can see. They want to decide if you can or can't have this tool. And open banking threw all that upside down and just kind of flipped the table over. And so now open banking says, hey, now your end user gets to control whatever they want to use. But that model cut the institution out. And so we're building the same open banking model, but around the institution. And with the access controller piece here, we now allow an unlimited scalability of fintechs, because we're not sharing any sensitive data or SOC 2 PCI compliant data or anything like that with the fintechs. We can have these fintechs go to market significantly faster. And so the investment from the fintech accelerator ensures that we'll have a constant, steady flow of well-vetted fintechs coming to the ASA platform. And so, we've already got a large number signed on, and we're only piloting with a handful initially. And then as we grow, we'll open the floodgates. And I think there's going to be fintechs coming out that no one ever expected. Are
you doing any of your own app development so are you reliant only on the fintechs, or are you building your own functionality?
We're just enabling the platform, and we're relying on all of the different.
You're just being a clearinghouse.
Yep, we're relying on the market to create those solutions. So our CTO actually completed a project over the last 4 years building Jack Henry's current payment platform. And before that, he built First Data's payment platform. He did some major work on Xbox 360 global licensing and McDonald's payments and other things like that. And so he's done some incredibly large enterprise solutions. And so we talk about it every day, but this is the most exciting thing that he's ever worked on. And he sees the opportunity here to change the course of where the industry is headed. So like you said, we have to have very good, technology in place to be able to make this possible.
Mm-hmm. Mm-hmm. Okay, thank you.
Well, thanks, Gary. Good stuff, Landon. We got about 5 minutes here left or something like that. So if anybody else has any questions, Rick, did you have anything to add here? Because you said you've been talking to a lot of credit unions nationwide about this stuff. So any additional stuff here before we close out?
Yeah, I'll just mention one thing. First of all, Landon, grab Caroline's question. She had a point there when I'm done. But
another one, yeah.
Gary, thank you for your questions. There's a lot of interest in what we're doing here for obvious reasons, because generally speaking, I think most of us in the business are offering one or two, maybe a small handful of apps. Generally in the small and mid-sized space, we have one app for our members, and it may or may not be used. It's just hard to know. So we have showed this literally to, I think, just about 100 institutions now. The smallest is 20 million, slightly over 20 million. The largest is about 20 billion. And almost universally, the question is, how soon can this be available? When can this get to market? And why haven't you built it before? Both great questions. We're going to market now. And you guys, I think many of you have my contact information. You can get it from Best Innovation Group. Reach out. We're happy to spend one-on-one time with you as needed. Landon, you want to cover Carolyn's question before we break?
Yeah, that's a good one.
Yeah. And Rick's email at ASA is rick.cranston@asa.financial, and mine's landon.glenn. But yes, Carolyn, to answer your question, this means you won't have to have your own PFM solution anymore. A lot of credit unions struggle because they might choose a PFM and some of their members like it and some don't. And so this allows you to have literally unlimited numbers of PFMs with niche solutions, and it's a merit-based model where the best apps are going to get the highest ratings and they're going to get the most users.
Good stuff. Good stuff. So are we going to, last question here? Well, maybe not last question, but are we going to find you guys at all the Finnovates trying to recruit fintechs and things like that? Or what's
Yeah, we just got approved.
Which would be kind of fun, actually.
Yeah, we just got approved over the weekend to present at Finnovate.
Oh,
so
really?
We'll be presenting this coming fall. And I'm excited to be back. We won in 2018 with my last fintech, and then I had an exit from that and started working on this. And to Rick's question, why haven't we built this yet?
That's what I was thinking.
It took us a couple of years to even decide that this was something that was possible and that the market was ready for it. Because in the past, I think everyone wanted a closed opportunity, and it meant if they open up to fintech, then they lose market share. And so this is the first time we've allowed a model where you can completely open up to fintech and maintain that market share through a partnership model. Yeah. So it's collaborative banking. It's kind of a new model.
Well, and even from the members' perspective, can you imagine, opening up and going onto your, credit union's website and seeing all the apps that they offer? Like, oh my gosh, you offer that? Oh, you have that? I mean, it's just like a smorgasbord of really cool apps to it. And just, again, it makes that credit union the hub. So, Rick, did you have anything to say?
No, I was just echoing your comment. Yeah. I think it's an exciting time. There's tremendous opportunity for us to move the needle. Our largest credit unions are doing great. That's wonderful. Sure. They're going to continue to do great. But now if we can find a way to get those small and mid-sized guys moving forward in their marketplaces, I think the needle can actually move for the entire industry. And that's an exciting thing to contemplate.
Yeah, just makes them that much more attractive for sure. Landon, anything else to add before we wrap up here?
Yeah, I was going to say that the only groups that are competing against the biggest, like Chase Banks of the world and biggest players and winning are fintechs. They're able to steal market share away for their niche solution. And so instead of competing head to head by trying to build the exact same app they have and trying to compete on their playing field, we're changing the rules, we're changing the game, and this levels the playing field. It's the great equalizer where even a 20 million asset size credit union can compete and win in technology against anyone, where your members could come in and on any given day, hey, how are you doing today? Oh, I just got a new job doing XYZ, or I'm really stressed out about this in my finances. Okay, we have 7 new apps that came out this year that do that. And let's fix that problem right now. Let's go sit down and talk about it.
Yeah.
And so it changes the game. It allows you to do something that was never possible.
That's a great scenario for sure. All right, guys. Well, I'm going to let you get back at it. We are at the top of the hour. So thank you so much. Landon Glenn, Rick Cranston from ASA, and the website is asa.financial, right?
Yep. Yeah.
Okay.
We'll be rolling out a new
contact
website.
Information's there. So yeah,
by
very
next
cool
week.
stuff.
Yep.
All right, gentlemen, stay in touch. We want to see where this goes. All right. This was a lot of fun.
Hey, looking forward to it.
And thank you for all the questions, everybody. Good stuff. We'll see you next week.
Thanks, guys. Nice to meet y'all.